let's just use simple numbers. You have a $500,000 property right now, single family home, and you want to turn it to a triplex, or you want to add a garden suite. And let's just use a simple number. It's going to cost you $500,000 to do that. Well, where do you come up with that money? We don't have the cash readily available. We don't have access to equity in our properties to pull out that money. So the next solution that we already started to forecast years ago that this was going to be a big thing is
Michael Zanzini, we are live, my friend. How are you today?
I'm fantastic, buddy. Every day above ground is a good day, and always good to be sharing this seat with you, my man.
Awesome. Listen, you're in a new studio, and we've known each other for a number of years now, but I don't think I've ever really kind of gotten into your story, your background, your family, how you kind of got into mortgages. But before we do, I want to dive into that. I want to talk about get a good market update, because a lot of people obviously are trying to figure out, should I get in now? Where are the investors, first-time home buyers? I want to dive into that as well too. And then I want to touch on the future, right? Well, where do we see things going for 2026? So lots to talk about today. I'm super excited to do this with you. Who is Michael Zanzini? What was it like growing up in the Zanzini household?
Yeah, it's a deep question, man, to kick this off right away. Very fortunate. Was brought up by very, very good parents, hardworking father, mother that was an educator, principal, elementary school teacher. So kind of both sides, hardworking immigrant father. So learn a lot of values on that side of things.
Okay.
And also the educational discipline type of side to my mom. So a good kind of common balance between both. How did I get started in my upbringing, and how did I end up getting into mortgages and real estate? Well, I was very blessed. My parents were investors themselves. Okay. I've been around the investment world, seen my parents accumulate investment properties, seen how they deal with tenants. One big thing my parents taught me was your money's always got to be working for you. You got to own real assets, right? That's how you stay ahead in life. And flash forward, obviously trying to make a long story short here, one day coming out of school and getting into the workforce, just like any young guy in this world, not really happy. Is this really my calling? Trying to figure out what should I do? Got into the trades, working. And one day my mom's like, why don't you get into real estate, whether real estate agent side of things, or why don't you get into the mortgage financing? Why don't you call up our broker that we work with? Maybe he'll take you on, go test it out.
Right.
So long story short.
Mr. Dave Butler.
Mr. Dave Butler, my parents' mortgage broker from many, many moons ago.
Yeah.
Been there ever since, going on almost 15 years now with the brokerage.
Why mortgages why not be a real estate agent with me?
Good question. To be honest, never really thought about that.
Yeah.
I don't know. Good question. I not sound conceited in any way. I think I would excel at anything I put my mind to and put a full effort in.
I agree with that.
The mortgage side kind of intrigued me. You know what I mean? Helping people get one step closer to financial freedom, owning assets on the investment side, helping a first-time home buyer get into the market, get financing, arguably the biggest purchase of their life, having that rewarding satisfaction of helping someone get to the next step in their life. And if going back to your original question with my parents, one thing that I think really makes our brokerage and me as an individual very successful is never looking at someone as a number, never looking at someone as chasing a commission check, literally trying to catapult yourself into their shoes, help guide them make the right decision, and really put the client-focused aspect first before yourself, and really trying to maintain that relationship and continue that growing relationship. And I think that's why we are so successful and why I am so successful.
Yeah. All right, cool. And, kind of going back to your childhood as well, too. Did your parents teach you about finances? Was that ever like a topic that was brought up with them being real estate investors?
Yeah, absolutely. I would say that's more on my mom's side of things. And I mean this, no knock to my father. I'll take 2 bullets for that, man. I'm here because of him today. And I've gotten a lot of my attributes because of him. is my mom was more of the business savvy finance side of things. And
Right.
I think that comes from growing up in Italy and immigrating here and coming from poor upbringing and seeing and all of that and wanting a difference. She wanted to be the generational change and instill that in my sister and myself to get to the next level. So I take a lot of that stuff from my mom who got to save. You know what I mean? You want to spend $100, you got to make sure you got $200. You know what I mean? And out of that $200, you better be investing or parking away 20 out of that.
So
you know
important.
what I mean?
Yeah.
Like silly cliche things like that has been instilled with me at a very, very young age. And yeah,
I think that's so. The reason why I kind of dug a little deeper into that, because I know even for me when I was growing up as well too, there was something that my dad always said was, "Man, if I had some money, I'd buy some land." And there was always something about land. I didn't fully understand it, but I knew he kept kind of bringing that up. And and as I got older, I'm like, yeah, there must be something about land. And you look at it and like, well, God's not making any more land.
100%.
And you take a look at real estate, and over the long haul, it typically goes up with the printing of money and inflation and all of that. And so,
and sorry to interrupt, what is the biggest hedge against inflation?
Exactly.
You have to own assets. Your money needs to be working and outpacing inflation, or else you're just getting left behind slowly but surely, right?
Yeah, I agree with that. And I think right now is such a great time for people to really be looking at real estate. And a lot of people be saying, well, hold on a second, I thought the real estate market is crashing, or it's not a good time. It's a great time. You want to do it when people are fearful. And so we'll dive more into that as well too. But you guys have some exciting things happening now at Better Mortgage Select. You got the Investor's Edge, you got a new website. Let's touch on that stuff.
So yes, we just relaunched. Actually, everything just happened all this week. So for listeners and viewers tuning in, check out our new fully revamped website. You can go to www.bmselect.ca. Very, very cool interactive features, videos. There's an application that you can download. And this is from everyone from a first-time home buyer looking to get into the market to a seasoned investor, to commercial lending, to reverse mortgages, everything in between. There is not one Canadian in this country who cannot pluck some sort of information from our website. And naturally speaking, we know every individual is different. Don't hesitate to reach out to myself or to our office to book a one-on-one consultation, and we can kind of build a game plan specifically for you. But our website is fantastic. Very proud that it has now been unveiled and available to everyone right now. But the other big thing is our new Investor's Edge Toolkit program. In my opinion, I'm smiling ear to ear here. It's something we're very proud of. It's something we've been working on for many, many years. Naturally, the real estate market has changed. The COVID era was absolutely wild and volatile. We are arguably in this predicament today in this country because of COVID, right? Especially for a lot of real estate investors who may have bought at the peak or own properties that are underwater, or clients that own multiple properties. And they, to your point, they see great opportunity in this market right now to get into it. But banks are telling them, no, you own too many properties. Clients want to get into short-term Airbnb. So we have different programs that we ended up working for many, many years, many Zoom calls, many in-person meetings, many phone calls with different lending options with lenders to say, hey, we need programs specific for people to help them grow, whether it's looking to scale and buy more real estate, whether it's they want to buy short-term Airbnbs and rentals and getting told no by their banks. We have programs now with lending partners who will finance short-term Airbnbs and midterm rentals. Look at the financials for the last 2 years. Look at what the property actually generates on a yearly basis, right? So different options like that. But the big option that we have for clients right now with our lending partners is this build-up program, where, back to the point, clients own real estate. They're underwater with their rents. Values have come down. They feel handcuffed, that they're stuck. They sell for a loss. Like, where am I at? What can I do? What are my options? Well, create cash flow, create forced appreciation and value to your property.
I love that. Yeah.
Right.
Yep.
And right now, the primary focus for renovation and construction loan type financing is typically done with private lenders and hard money, double-digit rates and fees. Like, it gets very expensive. So we've been working with some of our lending partners to create a program where they can determine the as complete value. You're eliminating the guessing game of you pumping in money in renovations or adding secondary units or garden suites and not knowing what that value is going to be after you put money into a project.
So what are you saying now that the bank that you go to, and I'm sure some banks are doing it, some aren't, is now they will actually lend you the money for your construction, for converting that single family home into a 2-unit or maybe even a garden suite. Is that what you're saying?
Correct. So basically, to break it down simply, there's usually kind of 3 facets we like to look at a client. One, hey, if you got the cash, 2, 3, 400 grand readily available to go turn your single family home to a duplex or to a triplex or add a garden suite, God bless you. Great. That's the most simplistic way of doing it.
Yep.
But if you don't have that option, our next scenario is, can we pluck equity out of your existing property or properties? Maybe get you a home equity line of credit or pull cash out to fund that renovation or that conversion. Great. Well, what if you don't have those 2 options available? What's the next best option?
Yeah.
The next best option is we created this program with some of our lending partners where they will give you the money to complete the construction. So for example, let's just use simple numbers. You have a $500,000 property right now, single family home, and you want to turn it to a triplex or you want to add a garden suite. And let's just use a simple number. It's going to cost you $500,000 to do that. Well, where do you come up with that money? We don't have the cash readily available. We don't have access to equity in our properties to pull out that money. So the next solution that we already started to forecast years ago that this was going to be a big thing is go to the lenders. How can you help finance these construction loans? As long as you have 15% of the overall construction budget, this can come from your personal savings, checking, savings, TFSAs, anything. As long as you have 15% of the overall construction budget and you qualify, the lender, our lending partners, will issue draw structures to help facilitate the construction of this project.
Yeah, that's amazing. So essentially what you're saying is now if I have to do my basement, it's going to cost me $115,000. I got to make sure I've got, what is that, 15,000 and 7,500, like what, 23,500 or something like that.
Just to get the project up and running. I call it skin in the game. Get the project up and running with your own resources. And then the lender will help facilitate the additional funds to get you to the finish line. So you need 15%. So 100,000, you need 15,000. 200,000, you need 30,000. And there's no limit. Obviously, we're talking to investors here that want to do bigger projects, but this is as small as renovation loans. Renovate your existing home, add a secondary basement in-law suite, get a garden suite. This is all geared towards residential financing, so 4 units and below.
Love it. Okay, so that's a great program. So if anybody's listening, check out Investor's Edge that Better Mortgage Select has to offer. Great program. Let's move into market updates. There's a lot that I want to get through here. Fixed or variable? A lot of people, they're trying to figure out, should I get into a fixed? Is inflation maybe coming back? Or should I play and maybe hedge my bet and do variable? What are you seeing your clients do, whether it be first-time home buyers or investors, or maybe even what is it you're recommending as well?
So we're going to have like a discovery call, like right here. This is like a real interaction, like myself with a client every single day. Number one, everyone's situation is different, right? If you're looking to buy a home, right? And your intention is you're going to renovate it or you're going to flip it or you're going to come back and you're going to refinance in the next couple months. Subliminally, you've already answered your question. We're not looking at long-term fixed rates. Why? You're going to have a higher penalty to break it. There's something we are going to be doing in the near future to break that mortgage. So we have to understand what is the intention. What are you looking to do on that property? Well, let's use a simple example. You're coming up for renewal or you're going to buy a property and this is arguably going to be your forever home or you at least see yourself there for the next 4, 5, 6, 10 years. Okay, now the conversation. What's happened? We've seen the market shift now with the Bank of Canada, our economy. The forecast is further cuts to come to the Bank of Canada prime rate, right? Further cuts on the horizon. Now the variable rate is starting to get it more into the conversation, especially over the last rate announcement. So now where clients have all been gung-ho on fixed rates for the better part of the last little while, the variable rate's back into the conversation. But we also have to understand how rates work. Fixed rates are tied to the bond yields. There has been very little to no movement from the banks on fixed rates right now. All listeners listening to this podcast need to understand when Bank of Canada, as they just did a couple weeks ago, dropped a 1/4 point. That has nothing to do with fixed rates. That is specifically variable rate products, variable rate mortgages, home equity lines of credit. That is all. But back to our point, variable rate is starting to make sense because you can have the ability to ride that variable rate down. If they are speculating we are going to see further cuts, you can ride that variable rate down. Hopefully, fingers and toes crossed, bond yields start to come down a little bit and fixed rates start to get offered at lower rates from the banks. And then you have the ability to lock it in for longer term fixed rates lower than what's being advertised today.
Right.
Am I in no way, shape, or form saying someone wanting to look at a variable rate, this is a 2, 3, 4 year, 5 year plan to stay in variable? No, this might be something that you play this game for the next 3, 6, 8 months, maybe a year, and see where the economy goes, see what is happening in our country. But yes, the variable rate can make sense for a lot of people. But then here's the other side of the teeter-totter, right? Not to contradict myself.
Yep.
You have a first-time home buyer, you have a client. Today, rates are lower than we have seen in the better part of the last 3 years. People tend to forget. People have a short-lived memory. Forget COVID, 1% and 2% interest rates. We have had rates in the 5%, 6%, almost 7% with Schedule A banks for the better part of almost 2.5, 3 years. Now, the average rate today, you can maybe get something with a high 3 to a low 4. Like that's kind of the norm right now on rates. 3s and 4s, high 3s, low to mid-ish 4s, depending on your term. How can I, as an advisor to my client, talk a client out of not wanting to play this volatility game, of not knowing where the market is going and locking into a really, really low, good, happy, long-term fixed rate? You know what I mean? Every situation is different and you got to do with what you're comfortable with, that bottom line, right? Are you comfortable with that rate and payment? Let's look at it. But the variable rate can make sense for a lot of people right now who have a little bit more risk appetite to see how things play out.
Yeah, that's a good way to lay it out for anybody, whether they're an investor, whether they're a first-time home buyer. It really depends on what it is that you're doing. You know, one of the best things that I ever heard right from the beginning when I got into real estate investing, and I was asking that very same question, should I do a fixed, should I do a variable, was what allows you to sleep at night? Now, obviously, again, depending on what you're doing, but if I'm going to be buying this investment property, I'm not doing anything with it. I've already completed it, and I've got, my horizon is 5 years. Hey, what allows you to sleep at the end of the day is really, the right answer, right?
Exactly.
Let's move on to condos. So what are you seeing in the condo space? It's a mess, and a lot of people are in a lot of trouble.
And I'm not saying this to scare any of your viewers or listeners today. I'm giving you real world reality because I deal with it every single day. And every single day, it's crazy out there. Mm-hmm. Like, let's call a spade a spade. The real estate market as a whole has changed, but the condo market has absolutely been decimated, right? A lot of clients bought in the peaks with these builders. And what's the biggest thing we're seeing right now? Values aren't coming in at what clients purchased these units for. Now, there's different ways of getting around it. Yes, we have relationships where we could potentially get blanket mortgages and get lenders to approve the purchase price versus the value and stuff like that. But the big thing right now is values. That's the big thing
when you say
right now.
Blanket blanket mortgages.
Correct.
Is this now what the bank had valued it at?
Correct.
Prior to it being constructed, and then now 4 or 5 years goes by and they're still using those same values? Is that essentially what's happening?
Basically, to put it simply, is the lenders will finance a client on a unit and base it on the original purchase price based on their purchase agreement.
So that's interesting. So even though we know the values have come down.
And I have to be very clear here. That's case by case basis, right? Like the majority of lenders right now are going off appraised value. If you bought a condo and you bought it from a builder for $650,000 and you're going to get an appraisal done from an accredited appraiser through that lender, and they're deeming that thing is $500,000 based on comparables and in that building, the majority of lenders are saying, we will finance your deal as long as you qualify, but we're lending on that $500,000 appraised value. You have to come up with the difference. So it's creating a lot of hoops and hurdles and speed bumps to jump through, especially as a mortgage agent in our office, who is number one team in Canada. We do the most volume, so we see a lot of it. Unfortunately, not to make a joke out of everything, I've become numb to it because it's like it's so common, but there are ways to help clients get out of that rut. I don't want people to think like, oh, they're done, their life is ruined. There's ways to get it done.
What are your thoughts for the next, say, 5-10 years where the condo space goes? I know it's a long way out, but I mean, you're looking at what? I think the numbers I heard was 70 to 80,000 condos still have to come to market. We also know that no builder out there right now is developing anymore. Do you see this potentially as a lost decade for condos?
It's tough. And I don't even want to go on the record with any predictions or anything like that.
Yeah.
It's like, I'm a firm believer, and I know you've been around the block even longer than I have, but I believe it's peaks and valleys. Everything's a cycle, right? Like everything will come back eventually. But I guess the best way that I can answer this is, I know we're so focused in this country about talking interest rates. I've always believed in my gut, it's never really an interest rate problem that we have. I believe it was a price problem. And I feel like the condos is the top of the mountain right now that's getting decimated with how many came to the market, and they built these small, tiny, overly priced units. But I feel like we have to get back to some sort of a reality of a price. Like maybe that is what is needed to trickle down to the overall market to get pricing back to half decent normal levels. Do I think the condo market will come back? Yeah, I still believe in supply and demand. I still believe we have so many Canadians here that need places to live. I think what they were priced at originally, these builders got very greedy, but that was a general whole as a country over here. Like in COVID, a house and a condo is not supposed to go up $100,000 in value every single week.
Yeah,
it's just ridiculous.
It was crazy. I mean, they were going up 20%, 30% some years, right? And so I think what you're also saying, though, is that it was an affordability crisis.
I think to me, that was the biggest thing, and not so much the interest rates. At the end of the day, I'm not pro-government in any shape, way, or form, but it's like, I believe the government had no choice. Bank of Canada had no choice. The only way to try to cool things was to raise these interest rates. Now, we can have the argument they lied straight to our face. They said, go buy real estate, go start a business, go pull out debt and get money and stimulate the economy. And they just did a massive rug pull and raised interest rates 11 times. Like, yeah, you can go and argue saying that was a big rug pull, but in all fairness, not to defend them in any way, how else did you try to cool this real estate market that just got out of hand? You have to raise rates. You have to slow things down because it was just getting ridiculous.
Yeah, it definitely was. Yeah.
Right.
And I think they may have known as well too that it wasn't transitory, but you also have to flush that cheap money out of the system. And the way to do that is by raising those interest rates, and people that were stuck in variable, it flushes that money out, that cheap money out, right?
And you can't expect results right away. You're starting to see the cracks show, for lack of a better term. It's happening, right? You're starting to see it now.
Yeah.
Which is not necessarily a bad thing, right? Like we're seeing.
Well, it allows first-time home buyers to get into the market. So a lot of speculators are getting flushed out.
Yep.
It now gives the opportunity for first-time home buyers to get into the market. Listen, I just helped the client purchase a condo in Pickering by the GO train station for $383. That is good. That is healthy for young kids, young families to get into the market. You want the middle class to be owning their own home or condo, a place where they can raise their family. I think it's important.
Well, I'll give you just a real world example. And it always sticks out to me because I was doing another podcast the other day and I brought this example up as well. I have a client of mine that I've probably pre-approved, no exaggeration, updating their numbers, young couple, probably once or twice for the last couple years. Every single year, they're like, I want to get in the market. Where are my numbers at? How are things changed? And finally, they called me up recently and they're like, we've been specifically looking in this condo region of the city for the last 3 to 4 years because close to his parents, close to her parents, commute for work. And they're like, everything has been 650, 700, 750 in these same couple buildings for the last few years. Now they're ready to put an offer on a property and they can potentially get into that same building for $150,000 to $200,000 less than where they have been looking over the last couple of years, right?
Yep.
Not on top of that, rates have come down.
Yeah.
So affordability is better for them. Not only just that, their pre-approvals are even higher. So maybe when they were just looking at a 1-bedroom unit, they may be able to get into a 2-bedroom unit and still qualify and still be manageable from a monthly carrying cost. So I feel like it was almost like a cleansing of our market. You know what I mean?
Yeah.
And trying to get back to normalcy. And to your point, especially for the first-time home buyers listening, this gives you the ability. Don't get me wrong, stuff is still friggin' expensive. Don't get me wrong. But in comparison to where we were over the last few years, it's starting to make sense again. Not even just for a first-time home buyer, it's starting to make sense again for investors to get back into the market and getting in at half decent prices. Now, especially with the programs that I talked about that we have access to, can even create even further cash flow and stuff to make sense.
Yeah, I agree with you. I'm seeing homes now where, I love Peterborough. We've been out there now for
You're the Peterborough man.
8 years now. We've been out there 9 years, and we're seeing homes for investors that you got to go in there, you got to renovate it, you got to clean it up for $299, and they're sitting there.
Insane.
Those are numbers that work, that make sense. You're seeing homes that are kind of almost turnkey in Peterborough for like in the low fives, mid fives.
And what were those price of those exact same homes 2, 3, 4, 5 years ago? How much were they?
Yeah, like 657, right? So they're going back to where they need to be, and now you're seeing those first time home buyers. They're starting to wake up. You're also starting to see some investors wake up as well too, right? I want to dive more into the market update in regards to mortgage renewal.
Oh man.
And I think we also know that there's a lot of mortgage renewals happening. I think the bulk of it is in 2025 and 2026. I don't remember what the percentage is. I think it's about like 50, 60%, somewhere around there.
Are happening now in the back half of 2025, and a lot of them are filtering into 2026.
What's the percentage of, was it about 60%, somewhere around there?
Majority, because you have to think about it, right?
Yeah, it was a lot.
If you're getting, majority of people take 5-year terms, right? Whether it's 5-year variable, 5-year fixed. So, and then you also have to remember, even the people coming out of the COVID era, maybe they took shorter term fixed rates to see where the market went. Well, all of these people are coming up for renewal now in 2026 and trickling into 2027. Good for them. Rates seem to be at a better state right now than where they were.
Right.
But yeah, a lot of people are still in for the shock factor, right? You have to remember, it's not even just interest rates. A lot of people were just over leveraged, whether you were an investor buying at the peak or leveraging your home equity lines of credits, or hell, at one point, I remember in the COVID era, I was able to get clients 0.99% on a variable rate. So think about it. Everyone and their mother was able to qualify. Yeah. And then what's the number one thing though that people call? What's my max pre-approval? So all of these people are going to their full tilt of a qualification on these pieces of real estate, right? And now they're going to get hit with the shock factor.
What is your concern? Any concerns?
Yes, I'm gonna say the concerns are people can't carry it. People are leveraged. People, not only just from mortgages and mortgage payments, property taxes have gone up, gas prices have gone up, groceries have gone up, insurance has gone up, everything has gone up. So you're feeling it from all angles. Now, the good thing with myself in my office, there are some solutions to help, I call it a Band-Aid fix, or help slow the bleed. What is that? You have the ability to refinance. You can consolidate your debt to clean things up in a more affordable payment. We can re-amortize you and give you a lower payment and help cushion some of the blow that you guys have been feeling. You have to remember, and I really want to take this opportunity as an educational point, is when somebody comes up for renewal, people need to understand, yes, interest rate is important. Structure, in my opinion, trumps just an interest rate. When you're up for renewal with your bank, they're saying to you, here are your rates and terms. You've been a good standing client with us, making your payments. Here are your renewal options. But people need to understand, you're just maintaining the status quo, same amortization, no material change. Here's your rates. Well, what if you can get relief and lower your payments by a few $100s a month? You're not going to get that by just renewing with your bank. Right. What if you've racked up debt? How do you get some relief there? Well, what if we can consolidate it into that mortgage and re-amortize you to get more relief and bring your overall monthly obligations lower? This is the importance of working with a broker or an advisor who's going to look at it as a full lens and give you all of your options.
Right.
Because when a client calls and said, oh, my bank's offering me X, Y, Z in rate, but I'm looking at their file, it's like, guys, what are you benefiting here? Look at the car loans, look at the student loans, look at the credit card debts, look at the lines of credit debts you have. What's your carrying cost here? Don't you want a little bit more relief and feel a little breath of fresh air on a month-to-month basis that you can do more things and not be as stressed and high-strung? Well, there's solutions there. I'm not saying it's for everyone, but there are options out there.
Do you see foreclosures increasing?
Absolutely. I'm working on a few right now.
I see it.
Working on a few right now.
Yeah, where you just take a look at it and say, look, you know what? There's no other options, and you've got to sell.
Well, you have to think about it. We're talking about the condo market and then the volatility of the real estate market as a whole, but we also have to understand the lenders are tightening up too. Not even just Schedule A banks, B lenders, private lenders, all of these institutions, right? Like it's been so crazy and out of whack for so long that they're holding a lot of stuff more closer to their chest. They're stuff that they were willing to take more risk and exceptions on. They're becoming a little bit more frugal on what they have as a portfolio internally, right? So,
Yeah. Listen, this is a great conversation. I want to continue this because I do believe there is more foreclosures coming. So listen, Mike, I appreciate your time and we're going to continue this conversation.
yeah, perfect.